Hey Kevin, this is for Monday, April 15th. I'll just start with the lean hogs. Insofar as they have relevance with the live cattle market, we did obviously push higher last week, but we did not settle at a new high settlement for the week with 99.12. I don't put a lot of significance in that. Bottom line here is lean hogs broad market is bullish through summer above 92.42, still expecting 108 even, possibly within several weeks, and perhaps 133.37 as a summer high. So bullish lean hogs, and that's about all that needs to be said. If we settle back below, actually, if you look at the newsletter itself, you can see the downward pivot point, which I know you're familiar with in the 87 handle. Just wanted to underscore that it's really not bearish until we settle below the 87.72 area, and that's not going to happen anytime soon. So bullish lean hogs, bottom line. Let's take a look at then feeder cattle. This is more refresher. We did settle above that long-term speed line again, 147.32 for the week, and so feeder cattle still remains bullish longer term, still expecting 163.5 over the next several months, possibly higher as we continue into summer trade. And you can see an upward pivot point at 150.152 on Monday with a settlement above should yield bullish continuation into next week up into the 156 handle, where we can actually top out at least on a weekly basis, if not into June trade, not June, into later May perhaps. This 150-152 is actually consistent with another upward pivot point in both June and August live cattle, and I'll get to that in just a second. But bottom line with feeder cattle, bullish above 147.32. And that speed line's been holding well, as you can see, since we settled above it by virtue of the volume-based rollover about a month ago. But still, nonetheless, that's a fact. And so let's jump into June live cattle. And actually, I'll show you this on the chart itself with the CQG. Just the short-term channel top that I'll reconstruct right here. And it's really nothing significant other than the fact that after, there it is. This is the area we settled below. You've got a high at a high settlement 150, 157. And this formation is 121. Did I say 151? I meant 121. This formation is 121.72. If we settle above it, it's just consistent with an upward path. Having, I wish I had all the, let me take a look at the June. The June, there we are. So, this speed line has not been labeled. It is the start of a wide range of support. It is at 119.22 today. But 118.15 is the base, and as you're well aware, above which this contract is bullish into expiration, and we should continue higher with a settlement today above that 121.70 short-term channel top I just illustrated, likely to yield 124.52, which is that other channel top, that long-term. It's basically this channel top, mislabeled right now because it's old. But this is what we're looking at. That's the 124.52. Now, by the way, these newsletters, I'm kind of jumping ahead. I'm still in Santa Fe, and I did a lot of forecasting for Tuesday's letters already. So some of the numbers that you see, all the numbers you see on these newsletters, I should probably just use the PDF because they're not updated. Anyway, so this is the structure. This is the area about a month ago we bought with the settlement above, and then we bailed out and so forth and so on. And in fact, it is the August buy signal that we'd be looking for. As we look ahead, bear with me here. This is it here. This is August. 121.15 on Monday, 121.20 on Tuesday. So, the 121 handle. And as far as the August is concerned, and that's probably the more relevant one that we should look at right now. And here's the buy signal for August. It also held. That's probably more. It's the same area, really. This is the 118.42 on Monday. If we close above 118.42, then we should continue into the 121 handle, and I don't have a problem buying this market with a settlement today above 118.42, because I do think then it's basically, this is a condensed version of that. You'd have a new high settlement, so forth and so on. This should push us higher into the 121 handle. And this is the big area for the broader live cattle market, I think, the 121 handle. So there's a weekly chart. I don't know why I jumped to that, but this reflects the June contract. Oh, here's an interesting. This is just a channel bottom on the weekly chart. And what I showed you in the 124 handle resistance for the June contract, 124.52, that's a channel top on the daily chart. But on the weekly chart, we have a channel bottom all week long at 124.52. So, you know, while I keep sort of backpedaling on that resistance area in the June contract and deferring to the August contract, the June contract finds valid resistance at 124.52 this week by virtue of this longer term weekly channel bottom. And so, you know, there is a case to be made for, as you can see, the cattle market being heavy overall with regard to the weekly chart. This is one of those, you know, contradictions between the weekly and the daily. And I saw this coming weeks ago. And, you know, obviously it's more important to um, use the June chart. I'm going to go back to this. That this is the real trend defining structure for this particular market, 118.15. Bullish above 118.15, not necessarily bearish below that weekly channel bottom at 124.15 I showed you a moment ago. So I probably should have started with the cattle spread. We'll jump into it right now. Higher settlement. You know, this sort of negates, this looked bearish for Thursday. We tested that resistance area here, and we settled, did not settle down on the day, but we settled near the lows. And so what we really wanted the next day, Friday, would be a lower settlement below that 3.025. We did not get it. Is that bullish? No, not really, but it does mean we're likely to challenge this area again this week, 355 even. And if we settle above it, you're well aware that I'll just draw those out right here. Boom. That's the next target within a week or two in the 427.5. And then really, with the rejection of this 3 to 5 week sell signal and settlement above 355 even, we're really probably looking for the low 5 handle, if you will, which climbs into the mid 5 handle by mid-May. Okay, until then, you know, we're still looking for 185. All right, so I think that covers the livestock. I'm going to skip ethanol and RBOB and jump into crude insofar as it's you know, as it's relevant to our Canadian dollar position. Big picture, still looking for 69.23 over the next several weeks, and in fact the 74 handle over the next several months, and that remains a fact above this former channel bottom, which this week is at 62.32. And so this area is in reach. I mean, last week's low was 63.13. We break 60. I'll get to this in a moment. Let me actually pull up the newsletter so we can take a look at the different levels. And, you know, 63.17 isn't significant, but I will show it to you anyway. It is nothing more than a very, very short-term channel bottom that you can see here. So I'm giving it session containment ability. 63.22. Sorry, that number is Tuesday, 63.17. I really should pull up the PDFs. I apologize. But they're so close, you get the idea. But do I have the crude? Yes, I do. So 62.32 bottom line. We hold above this. Market's bullish. If we close back below it on Friday, we can just kiss that Canadian dollar, I think, goodbye. Not only would we have a lower settlement, a settlement below the low of the move high so far, which was last week's low of 63.66, but also below that channel structure, 62.32. Is that a significant sell signal? No, but it is probably enough to reach at least 59.66 and more than likely 56.99, which is a longer term channel structure on the daily chart. And I'll just show that to you here very briefly so you get a sense of what I'm looking at. It's this. And that's really what we would, well, it's 57 handle as we continue into later week. Closing below 62.13. This is likely over the next several weeks. Let me just jump into the Canadian dollar while we're sort of talking about it, and I'll jump around here a little bit because we're in this trade. I like that settlement. It wasn't higher though. I mean, higher beyond the 75.27 half, and I believe that was the high. No, it wasn't. Um, but we do need to really settle above the recent high settlement. It is an area this market is obviously respecting short term, um, but all kinds of stuff going on here. But if I were to simplify, I would just say bullish above 74.92 for the Canadian. Nice to see us continue holding above this level. And then you've got a sell signal below this little channel structure, but I'm gonna give it the slippage factor below this trend line, which is at 74.68 on Monday. All right, so this is our range, and holding above it, it looks good. I mean, I think this is a realistic likelihood. Oh, I don't know about this week, but next couple of weeks, 76 handle. 76 handle, by the way, is significant, but it's the upper 76 handle that is really significant. It's this is for the week itself. 76. Sorry, 76.80. That's our big area, and that's kind of our target right now. So here's the weekly chart. Here's the channel top. We settled above it actually for the first time last week, believe it or not. So we're still in what could be the earliest stages of a 2 to 3 week, 3 to 5 week rally into the upper 76 handle. But as I just mentioned, all bets are off with a settlement today below 74.68. What else do we have? We've got, I'm going to jump into the positions. We've covered, we're in the lean hog spread, we're in the Canadian dollar, and we're in a corn spread. And let's take a look at that July Ds. So, here's the channel structure. Negative 21.3. Move that. Negative 21.3. That's the get the hell out of Dodge sell signal if it gets down there in the next few days. Rather, settles below it. Until then, this is a stable to even bullish market. This is bottom picking territory, but we really don't have a buy signal, as I've been mentioning. My chart gets stuck up here. I have a call CQG as to how that happens. But our buy signal is right here. This is the, we could add to our position, in my opinion, if we settle, excuse me, any day this week above negative 17.6. All right. Canadian dollar. Let me come back into our regular stuff. Let me just underscore corn. I'll just show you the chart here. 365 and a 365 half Monday, 365 and a quarter Tuesday. Same area. This is our buy signal. I'm all in favor of buying this market if we settle above it. Until then, still looking for 347 half long-term support, which is an area I've both agreed we can actually buy into if given the opportunity. And if we close about 365 and a quarter, then we're off that sell signal. In fact, the market should continue then into the lower 380s where we encounter this long-term speed line, which on Monday is at 382 half. So that would be our target with a settlement above the 365 and a quarter channel top. You've got a very similar structure in the December contract as well. It's a speed line actually at 390 and 3/4. So if we settle above it, yeah, there's a channel top that'll give the market trouble maybe for the rest of the week at 394 even. It's funny, this December contract is quite different than the May. It looks similar, but its volatility is reduced, and the targets aren't nearly as significant. I mean, for instance, a settlement above 390 and 3/4 indicates about a 10 to 12 cent move, whereas in the May contract, it's more of a 20-cent move with a similar buy signal. So, and the channels don't line up. December is more stable and less sell oriented. It's taking on less sell pressure, I should say, than the May contract. It's similar to the difference between June and August live cattle. That's not to say that I'm more in favor of buying December, but I don't have a problem buying December instead of May with a settlement above 390 and three quarter. But I would rather buy May actually because I do think it's going to give us more bang for our buck to the upside. Soy meal, soybeans, similar situation with soybeans. 906 even on Monday. This is a forecast for Tuesday at 905 and three quarter. So 906 even, 906. I think 906 and a quarter is really the level to settle above on Monday. And if so, the upper 930s are expected. I might as well just pull up the newsletter itself. And here it comes. All right, 905 and three quarter. This is sorry. This is this is Tuesdays. I've done all the forecasting so that when I arrive in Crested Butte at noon, roughly, I don't have a lot. I don't have all this to do. It's all much of it's been done, just the pure technical data, and then reinterpreting the market. But this is if we settle above this formation, 905 and three quarter on. It's 906 and a quarter Monday, 905 and three quarter Tuesday. This is what we're looking at on the weekly chart, the upper 930s. So I think that's realistic, and I'd be in favor of actually buying it. Until then, the market is susceptible to slipping back not only to 875 and three quarter over the next week or two, but even 857 half over the next 2 to 3 weeks, 3 to 5 weeks. 857 half being up. With respect to the May contract, it is a significant support area that should contain selling into expiration, which is actually not far off. And in fact, I probably should start taking a look at the rollover into July contract, just to give it a brief glance. Look at that. You know what? I probably need to roll this week, right? In corn. Yeah, I'll be rolling into July here very soon. So I may have done all this forecasting for Tuesday. I'll probably continue Tuesday with July, and Wednesday will be the roll. I like to give it a couple of days anyway. The beans are not so much. In wheat, not yet, but corn, certainly. So there's that. Take a look at wheat. This is the 451 and three quarter area, 2-star support. Let me go ahead and pull that up. That's 451 half though for Tuesday. You know what? I should just pull up the PDFs so there's no confusion. PDFs still are actual Monday letters still because I haven't saved them to PDF. So 472 even, this is our level. Now, I just have a question for you as to how you might want to play this. 492 and a quarter is the start of a long-term resistance in the May contract. You know what? I'm going to go ahead and just take a quick look at ZWAN19 and see what the July contract has to say with regard to the same structures. Okay, I'm already liking this better. A little bit better. 496 and a quarter, 495 half. So more mid to upper 490s on the. Reason I'm putting this out there is because if you take a look at the weekly chart, it's at 505 even. So my question to you is, assuming I think if we do get involved in wheat, for instance, it should be the July contract, which is probably true of all the grains right now. We've got resistance at 495. Let's call it 495. We've got a 10-cent range of resistance, and so I think one of the ways to play that is, and I'll just put a trend line up at 505. And there's 505. Sorry, 505. 505 and a quarter. So here's our range of resistance. This would be the recommendation that we, if we buy a put in this area, we would have to, if we sold it at 495 even, for instance, we would have to allow a 10-cent move against this. or we could just wait for 505 even, but it just might not happen. You know, the channel top on the July contract may actually hold the day, if you will. But anyway, this is a conversation worth having, assuming wheat climbs over the next week, 2 or 3, into this critical area. And S&P, lots of charts there. I'm just going to pull up the newsletter itself. And we've got this 2947. That's likely this week. I'm calling it multi-week containment just because it's the high from last October, but there's no reason why this market can't settle above it on the first attempt, perhaps. Because overall, as we look at this weekly chart, which really is sort of the trend-defining structure, we had the buy signal a few weeks ago, and 30.95 half remains our 5 to 8 week, 2 to 3 month target, something like that. If we settle above 29.47 even this week, which is this high here back in last October on the previous chart, we could get up to 30.95 half within 3 to 5 weeks, where the market can top out possibly through the balance of the year. So that is the big picture objective. There's no real change here. If we settle below 20.88 even today, this is nothing but a short-term channel bottom against this activity here for the last week and a half, 2 weeks. Then we should, or could, I should say, break back into this support region down here. I'm going to go back to the chart. Where is it? I don't know, actually. PDF. This 2803. I'm wasting a lot of time here on the S&P. But it's worth it on a Monday to take a look at the big picture stuff. 28.15 half is the base of support, which is also supported by, this is the S&P daily chart. This is the daily continuation chart, which is also supported by this structure here, which on Monday is at 28.03 half. So that's climbing throughout the week, and by oh, Good Friday. Friday's off, isn't it? We have a short week this week. I forgot. 28.12 half comes right together at the end of the week. 28.12 half. So anyway, there's that. All right, let's take a look to see. We'll jump into some of these other markets. Euro currency traded up last week. Still in the middle of this no man's land between two significant areas. I'll just take a look at the British pound here real quick. Same thing. That was a very quiet week last week, but this week 29.61 is the channel base, above which this market is stable, consolidative, and in reach over the next several months, let's call it, of the 138 area. No big change there in the British pound. Take a look at the US dollar. We still have pretty solid long-term support in the low 95 to upper 94 handle. I mean, I could update these numbers, but I don't see us getting down there this week, but I shouldn't make any strong assumptions. I can at least update them. So that's 18, and this channel structure here is at 75. No big change. 75 is really the big one because it is a basic channel classic structure. And above that area is still looking for the upper 99 handle. We've got some Fibonacci retracement here at 97.83, but as you're well aware, I don't put a lot of, I mean, we've got kind of a double top thing going here. At the next attempt, this thing I think is really susceptible to violation. And we would look for the ultimate target then at 99.71, which is consistent. You've got a lot of stuff in the upper 99 area way back, and you've got a base of consolidation here. So gold sold off, as you're well aware. Last week we tested or came close to testing this resistance area, and I'm going to take this. This is just a trend line right now, but this is 13.18 half. Now, you know, I'm not in favor of selling it next time up. I'm more, as this is what I said last week too, I'm more in favor of buying it on a buy signal above this 28.9 formation. But the truth be told, until then, this market remains heavy, and I think this triple bottom is going to be taken out on the next attempt. And now we're looking for the speed line at 1262 even, roughly. So there's that. Bearish below 18.5 down to 1260, bullish above 1328.9, and then we would look for a channel structure similar to this, which at this point in time is in the 1380s, but by the time we get up there, it'd probably be close to 14 even. Silver backed off. That's interesting. Settled right at the support area, and for the first time below this channel structure. So, you know, I might as well put that out there. That's 1520. And then, silver is susceptible as well now to backing off. Take a look at copper. Copper looks good. This is kind of an economic indicator, really, as you're well aware. So 84.14, that was a forecasting, I guess. I already had it labeled properly. There's the base of support for copper. This is a weekly chart, and above that, you know, we're in consolidative framework here for weeks, 6-8 weeks. But there's no reason to sell this top of this area. This market is inclined to continue upward, holding above 22.8414. 26 minutes. Let me take a look at the 10-year note here. Look at that. Look at that. That's a failure, or close to it, I should say. I wish I could retrace that, take back that label. It was at 0608 last week, 0608. And this week it's still at 0608, except this one is at 06 instead of 08, and this one is at 08 instead of 06. But it's still the same area, 123.06 to 08. And now we closed just below it, but I'd call it a ceiling. This market is susceptible to slipping back. No reason to really aggressively sell this market, though, until it breaks this. And that for the coming week is 122.11, which actually is reachable. I'm going to go ahead and take this channel off just to give a little clarity here. This is also a former speed line. So this is the real, you know, pullback buy area on the 10-year. And I guess what I'm really trying to say is there's no reason to sell this market until we violate this 122.11 formation, which is consistent also with the speed line at 122.13. So I'm just going to add the 13. And let's see what else we have. Anything? And NASDAQ obviously would be taking off a bit, continuing higher, but not aggressively. We have this high here at 70, what is that? 77.2875. But we're still looking for this channel top at 81.10 this week. I'm just going to round it. And this formation here, this is a daily chart, by the way. I don't know why I'm fussing so much with it, but I'll finish it. 19. 75.19 is the base for this longer term structure. Alrighty, bullish above it. Finally, jump into sugar. Take a look. A little, actually have an unchanged settlement, really. A little higher by one tick on the week. But our breakout this week is 1306 even. And that could actually yield bullish continuation over the coming months into this upper $17 area. I mean, it's a bit of a stretch. I mean, it's like, you know, predicting you're going to hit it out of the park. But I think this could be realistic. I mean, you've got a little, if you really wanted to talk yourself out of buying it, you could. You've got this channel formation here, 1424, or you got this at 13. But, after all this, I think getting above this band, it's worth a buy. Whether we want to buy sugar or not, I don't know, but we could talk about that. But I don't think it's going to happen this week. Uh, Cocoa is in the middle of its, buy signal that should continue playing out over the coming weeks into the 25 handle. I'm not even going to relabel that just yet. It's at 20 in the 25.20s later in the week, and this is at 23.30s in the 23.30s. And finally, as we push the half-hour mark, we've got cotton that came close. I'm going to relabel this at least. So this is going to be 79, 69 to 80.20. I'm just going to call it 79.70 to 80.20. And that's the ceiling. 80.20 I'm quite sure is channel 2.2. Yes, it's this former channel bottom. This is not as significant, I think, as channel 4.2 and channel 2.2. 79.70 to 80.20 is our range of resistance, below which the market is, now having come within 1%, I'm guessing, of testing it, vulnerable to slipping back. But we really don't have a sell signal in cotton unless we settle the week below 75.71. And there's that. And do we want to look at coffee? I had a guy call me a couple days ago, wanted to know if I did coffee. That sucker is heavy. There's no reason to buy this thing. None. 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 It's just, I mean, we're below this 2013 low and all, it's just, but it's a low volatility framework too. And all these are moot, irrelevant because they no longer are valid. But I will at least just give a short term, what our next short term buy signal would be above 94.68, and I'm going to finish with that. Whatever the lead contract right now is in coffee, that would be the buy signal for the week. But we could look at calls if this happens. After all this, it just might perk up. That's it, Kevin. I will presumably, now I'm going to be on the road tomorrow, and I will reach out around 8 o'clock just to see what your thoughts are on anything, and see what the cattle markets are doing, so forth and so on. But I can be reached at any time. And if we don't talk, that's fine. We'll probably talk later in the afternoon. And that's all I got to say. Talk to you later.